Gary Gensler's SEC has approved the ETF on Bitcoin Spot, and it seems that the cryptocurrency market has barely flinched in response to this event. However, there's an exception in the crypto ecosystem, as we can see Ethereum has indeed benefited from this development after the news broke. On the other hand, in Bitcoin, we've witnessed rather normal volatility. How significant is it then that all altcoins are in relevant zones? Now, it appears that the market is confirming structures. Here on the left, you have the Ethereum chart. Remember, we give great importance to this level, this structure. We've been saying that in the event, the SEC approves the ETF on Bitcoin Spot. Specifically, Ethereum would have to experience a strong climactic bullish impulse. And with Bitcoin, we've been working on this yellow structure here on the right. Although we've been observing that the climactic bullish action seemed to have already taken place, we questioned it and said that without any problem. And when the price was at this point, we could experience a new bullish high after the approval news on the Bitcoin Spot ETF. If it's approved, what we can expect from the crypto market is that in the case of Ethereum, we'll see how, but they may offer us an aggressive climactic bullish action with the announcement of approval, where here, the retail investor would be euphoric, buying desperately. An event that large institutions would obviously capitalize on, and one might think, hey, but if they've already done the climactic bullish action in Bitcoin, look, they could do another one perfectly, they can. In fact, if we put things into perspective, that supposed climactic bullish action seems extremely timid to us. So, hey, if the Bitcoin Spot ETF is approved, let them do whatever they want, but it would be accompanied by a dramatic bullish movement. Just like with Ethereum, retail investors would buy, and we believe large institutions would absorb. After having experienced such climactic actions, while it's true for the entire crypto ecosystem, for all investors, the climactic bullish action in Bitcoin apparently could have been very, very timid. I must say that, in reality, we can consider ourselves satisfied. Look, now you're seeing the Bitcoin chart in daily time frame. First, it's important to identify where the origin of the breakout is. Here we have a very, very relevant structure that, as you'll see, the price recently came to acknowledge before carrying out a climactic action. Well, these prior confirmations before the climactic action itself have an incalculable value. So, what we're going to assess here is the institutional target of this entire bullish accumulation process. While we've known for quite some time that smart money has been accumulating long positions here, we'll see, knowing how institutional money moves, how they've precisely contacted the institutional target. In other words, large investment funds buy throughout this range and close their positions to recover their investment plus profits up here. On the other hand, people accustomed to seeing our advanced technical analyses know perfectly well that there are classic trap scenarios before seeking an opposite direction and before determining whether we really think this will happen. Although if you watch our videos, I believe you know very well that we've been waiting for that final bullish climactic action for a long time, and a good catalyst for movement was going to be the news of the approval of the Bitcoin Spot ETF. You already know our discourse well. Now, take a look at Ethereum. Observe the working angle in this daily chart of how major institutions have been operating this asset. So, in a perfect scenario where it was very plausible to expect a bullish climactic action in Ethereum with the approval of the Bitcoin Spot ETF, as our cross-analysis suggested, on the one hand, it should not surprise us, but on the other hand, now notice how Ethereum is reaching the alpha angle of the ceiling of the bullish channel simultaneously, as Bitcoin has just confirmed with surgical precision that they have contacted its institutional target. As you can see, both Bitcoin and Ethereum are in different market contexts that from crypto insight we have been seeking for a while, saying that this final bullish climactic action has to happen. Well, now we find ourselves in that scenario we've been searching for, seeing how prices are seeking those extremes. Now I want you to focus on the daily chart of Cardano. Notice, on the one hand, we have Bitcoin and Ethereum working on one type of structure, and now we will see altcoins working on a completely different one. But you'll see in this analysis, they want to tell us exactly the same thing. Look at Cardano as we identify a truly important zone that it recently came to after a great bullish party. Taking this into account, if we zoom in, even going down to 4 hours, we will notice that the price is compressing against a relevant structure after a strong bullish climactic action. And this compression has been broken to the downside, and now they are validating it. Remember the following: we are at a market extreme, in a critical situation, and this is not only told controlled by Bitcoin, Ethereum, and Cardano, but I dare say the entire crypto ecosystem is doing it. Look at Polkadot in 4 hours. Now we will see where this line comes from, but in the end, they are compressing the price against a relevant structure that was broken, and that they are now validating the origin of the breakout. Now, pay close attention to where that guideline comes from. See if it comes from a relevant point in the Polkadot market that has been contacted in a precise and neat way. One thing is clear, and that is that the main trend of these altcoins is clearly bullish. Here you have to be very careful not to think you're smarter than anyone in identifying the exact point where the market will turn. However, here we are evaluating a medium or long-term idea based on the cross-analysis of the cryptocurrency market, studying how smart money really moves financial markets, and this is where we present our hypothesis. Now, look at SHIBA INU in its daily time frame. Let's zoom in a bit in here. On the one hand, you may already be noticing that the price not too long ago came into contact with a climactic action, a very relevant structure which, from crypto insight and zooming in a bit, we were already commenting that this compression against a relevant structure was likely to collapse strongly. If we go to a 4-hour time frame, let's see that they are working on this breakout guideline. There has clearly been a distribution process here which they broke, and now they have come to validate the origin of the breakout. Notice how Bitcoin and Ethereum, in different contexts, are talking about a market extreme, and how altcoins, a priori, are telling us exactly the same. In other words, rather than encouraging anyone to buy or sell, in the end, everyone should do their own analysis and make the decision they consider most relevant. The message we're trying to convey is that in such an evident bullish extension of the crypto ecosystem, and after the emergence of such relevant news that could potentially be positive for the crypto ecosystem in the long term. Let's not think that in the short term it would be prudent to buy up here in a movement that has already been widely extended, where everyone sees that the price has already had a bullish rally, thing in an extremely structural context that could harm any buying intention in these types of situations. But notice how this crypto message is telling us a lot about many cryptocurrencies. Look at how we also identify this level as relevant and observe how the price has come to respect it in a very precise way. The Solana chart on its daily time frame is sending us a completely identical message. Look at its 4-hour time frame. Here we have a clear working angle that was pierced, went to look for some liquidity, and now notice how the origin of the breakout is being defended. As mentioned, compression, distribution against a very relevant structure. We break, we are going to validate the origin of the breakout. An extreme situation where it may make sense to prioritize a bearish perspective. And now look at BNB on its daily time frame. Notice how we have been working on this crypto for a very long time. And now, look at how the price has reacted against this structure. On a 4-hour time frame, if we zoom in, you will notice that distribution has also been happening here, compressing against a relevant structure that has been pierced, and now we are visiting the origin of the move. In the end, we are in a crypto market context where it is not at all prudent to seek purchases. That doesn't mean the market won't go up and explode upwards tomorrow. Ultimately, no one has a crystal ball, and trading decisions are not based on the belief that someone has absolute truth. However, with a bit more knowledge, we can assess risk scenarios. Here, it seems quite evident and explicit that seeking market buys after this rise against such relevant structures doesn't seem the most intelligent. I ask you, where do you place your stop loss? Do you place it down here? Are you willing to risk losing that much? I don't know. When it comes to risk management, buying now is an idea that could potentially harm your pocket significantly. Take a look at XRP, a macro distribution that we have been assessing, a significant structural breakout, and now we have gone to visit the origin of the move. Now, I'm going to tell you what I think will happen in the crypto market. But first, welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity. Let's put on the table the significant risk an investor would take if they decided to initiate a purchase at this point. Look at how Bitcoin has risen. This is the typical moment when your brother-in-law, who has no idea how financial markets work, tells you, "Hey, I've seen in the news that cryptos are skyrocketing. I want to benefit too. Why not buy a bit?" This is the exact moment, don't you think? Question: do you want to be your brother-in-law, an investor who understands risk management? One who can assess that making a purchase with long-term goals here and now is very very, very dangerous. So, what we are going to assess here is the following. On a daily chart, pay attention if the price can stay below the institutional target level it has validated at the price level of $49,132. From here, if it can return below significant structures, I have no doubt that corrections will come. Remember, we're looking for the search for that bearish replication, which we'll bet will fail, and then yes, look for that bullish direction. Buying on a hypothetical correction will have much less risk than wanting to buy now. No one has a crystal ball. This is just a working hypothesis. What does that mean? Honestly, we don't know if the price will explode upwards here and reach all-time highs. Even in that scenario, do you think it would have been wise to buy here? The answer is quite clear. No, it wouldn't have been intelligent, even if we see a great explosion towards all-time highs. In the end, the world of investments is exclusively governed by risk management. If we don't understand this, we are playing at the casino. With Ethereum on the daily, notice that we are already at the extreme. Why not allow a little trick? Yes, something slight. Here, look for compression, and if we see that the price doesn't exceed $28-30 and starts entering a range, it will point to seeking that bearish correction. We hope it fails since the harmonic can be attempted, but we don't think it will develop, or else the market would go to zero, and we don't believe that. Instead, during this hypothetical long-term fall, it might be advantageous to seek long positions in spot. That would be more prudent in terms of risk management, therefore smarter, and I think I'm satisfied with this explanation. As we can see, we are in scenarios where the risk, if we seek it, is undoubtedly present. Reducing it, the market's invitation is to prioritize seeking shorts in the market. Your stop loss can be much tighter. If the trade goes wrong and the markets reach all-time highs, you'll be able to lose very little. The intention is to anticipate that we are in an extreme market, which will lead us to hypothetical profit margins much higher. With these reflections, this is how you should work. Now tell me, what do you think about the crypto market? Do you believe it's more prudent from where we are now to look for longs or shorts? Leave your opinion in the comments. Also, give the video a thumbs up, subscribe to the channel, and click the bell icon so that YouTube notifies you of future posts. Wishing you successful trading, and until next time.